Welcome back. You're watching us here on Halftime Report. The stock on our radar right now is Wonderla Holidays. Reported a weakish set in terms of performance. Why do I say that? Because seasonally strong quarter, the footfalls actually declined by about 1.5% over the same time last year. And as a result of which, along with the expansion that the company has undertaken, the expenses have increased. So that revenue decline of 1.7% has actually led to a bigger decline that we've seen in the EBITDA and the profitability. And understandably, the stock is under a wee bit of pressure as well. Arun K Chittilappilly, who's the MD at Wonderla Holidays, joins us now. Arun, thank you so much for joining in. It's what's affecting consumer sentiment, and by when do you expect footfalls to return to positive trajectory? That's point number one. The first 9 months of this year as well, we haven't seen great shakes when it comes to footfalls, right? You were expecting the footfalls to be flat to marginally negative this year. Do you have a better handle on where this will be by the end of this year?
Mangalam, always a pleasure having having a chat with you. So thanks for having me on the show. Yes, like I said in the beginning of the year, this year is looking a little tough for various reasons. One is, I think, the sentiment of customers across the discretionary spends has been a bit weak. And on top of that, we also have inclement weather and those kind of situations kind of playing havoc with our footfalls. You have to understand that an amusement park, literally, we need to get footfalls into the parks, and people should feel like coming out. So those sentiments have been a bit weak in the last quarter also, especially for our new park in Bhubaneswar, which was hit by 2 cyclones in the last quarter. So I think that has really, spoiled the party for us. But otherwise, some bright shoots for us. For example, Hyderabad saw a footfall growth after a while. We are seeing some improvement in demand in Cochin as well. Bangalore continues to be a little weak, but I think by the end of this year, I mean this financial year or beginning of the summer, which again is the next big season for us, I think we can see some improvements. I should also caution that this is because of the big base that we had in the last 2 years. So that could be another reason why we are seeing some softness this financial year.
Arun, good afternoon. But you mentioned that your park in Bhubaneswar was hit by 2 cyclones in the quarter. What does that do to your full year target for footfalls there? Because you had mentioned for 3.5 lakh by the end of the year. For the first 9 months, you've done only 1.25 lakh. Presumably, you would fall short?
Yes, I think we had projected 3.5 lakh footfalls, but I think we should still end up with a 2.5 lakh, between 2.5 and 3 lakh for the year is what we are hoping to do. But either way, what we have also realized is Bhubaneswar as a market is highly dependent on summer. So the summer weightage for footfalls is going to be higher compared to the other quarters. So and it's a new park and new location for us. So I think the first year you can expect some of these issues to kind of exacerbate the issues we already have in terms of footfalls. But I think over the year, what we are expecting is, I think next year onwards, we should be able to see good footfalls. The season there starts early in March, so I think we should see some growth as well.
All right, Arun, we usually speak quarter after quarter, and this is a business where over quarters, not much changes, but over years, a lot changes. You've recently raised about 540 crores by the QIP as well, beginning to deploy it as we have the visibility for the next 12 months or so. In December 2025, we have the Chennai park coming in as well. But yes, if you look at the business from a long-term standpoint, you get the money, you get capex, incur it over adding new parks that happens, say, on an average every 3 to 4 years odd. And then you have the annual maintenance expenditure that you do as well. From a revenue standpoint, it's dependent on how much people spend every time they visit the place, and more importantly, how many people visit that place itself. It's footfalls into spends per head. How do you make this business a lot more, resilient to the vagaries of the environment right now? Because what we're seeing right now is you are doing your bit, but the new capacity comes in only once in 3-4 years. Whereas the dependence on footfalls or the people who are coming in is fairly variable. How do you make this a lot more exciting, and how do you, make this a lot more resilient as against this sort of variability that we're seeing?
So there are a couple of things, Mangalam, that we can do, which we are already doing. One is to have parks across more geographies, which are more divided across different locations. And this has been our endeavor, for the last 4 or 5 years to try and have parks in various different geographies, so that even if one or two locations get affected, the other locations can, kind of cover up for it. The other big initiative that we are doing is online bookings, pre-bookings, even at a discount. So these are the two things, and that will help us lock in footfalls and can kind of give us a little more of a hedge against, sudden variability in footfalls. If you look at our online bookings that have happened in the last quarter, it has almost doubled compared to the same quarter last year. So I think that gives us a lot of hope that we can do that going forward. And as a geographical expansion, like you said, we are opening Chennai. We are also looking at maybe adding one more location by the end of this financial year to the portfolio. So I think we will definitely keep trying to expand geographically as well, and also using online interventions to make sure that we can lock in footfalls. So these are the two things that we can think of immediately.
In the world of AR, VR, and all these things, is there a way you can make the brand experience a lot more democratized than just limited to the geography itself? And that reduces the lead time as well. I mean, if I have, say, small AR cubicles across multiple parts of the country, you can easily make it, you can give people the Wonderla experience without them actually having to visit Wonderla, and that becomes a feeder for the store. Just thinking whether you're thinking on those lines, etc., to leverage the brand Wonderla to, revenue as well for you.
See, so AR VR is something that we are also embracing, and we are in fact launching a new attraction in our Bangalore park this quarter. It's a large AR VR attraction. But I think the real promise of a Wonderla experience is having a day out from your normal day in a beautiful surrounding. So that I don't want to dilute it too much by doing something smaller in the city. And the moat for something like that is much lower. So we feel that so those are easier, smaller capex items, and anybody can do that. Whereas to get a full Wonderla experience, you need to come to a large place and just take in that whole ambience and forget your day. So the normal day in your life. So that is the whole brand promise that we have. So it will be difficult for us to completely digitize it. And we don't want to also, in a way, because I think this is going to, human experience in terms of spending a day with your family or friends. It has to be not virtual also. So that's what we believe, and that's, I think that trend will continue as long as I think we seek human connections and things like that. So I don't think that can be completely virtualized. So we feel that we want to geographically expand, but we don't want to dilute it by, for example, having multiple centers in each city and things like that.
All right, Arun, thank you so much for spending time and joining us today. We wish you a wonderful 2025. That is the management of Wonderla Holidays there, with the road ahead for the company. Time for a short break, but before we do that, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC TV18's all-new app, where you can get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. You can download the app now from the Apple Store or the Google Play Store, and you can just scan the QR code that will come up on your screen, and you can download the app after scanning that QR code. Take a short break. Be right back with more.